We're going to talk about where gold is now, where it's been in the past, and yes, this is 250 episodes later for the Gold Spot. I'm Eric Sapanic, this is Steve Rand, and this is the Gold Spot. Hey Steve, 250 episodes.
Been a long run.
It's been a long run. We actually started this show June 17th, 2020 during COVID. During that time frame, things were just so chaotic that we decided that it was time to start talking to our clients and our customers, which then turned into an entire show, which was really something unique. And we've had so much support, questions that have come in, so many different topics, and we've had some pretty good predictions along the way. But something that I want to talk about, Steve and I have been in the business now for 20 years each. To kind of give you an idea of where we began, gold at that point in time was about, I'm going to use round numbers, $400 an ounce. That's where we were trading it at. I don't think me nor Steve at that point in time ever predicted that this week we'd hit an all-time high of $3,500 an ounce. Now, to give you some perspective, if you were to say spend $1 million when we started and you put $1 million into the market at that point in time, that would have rendered you 2,500 ounces of gold. Now, if you would go ahead and trade that 2,500 ounces in for $3,500, that would have rendered you $8.75 million. So in the last 20 years, what a stable and absolutely substantial growth that we've seen with gold. Now, that's a 775% move, but it's actually had bigger moves than that in the past. Steve, can you enlighten them about that?
Yeah, so back in 1971, when we went back off the gold standard and gold started to be the start of being traded legally. It didn't actually get passed through Congress until 1974, and then in 1975 is when you could legally trade gold again. Well, in 1980, we hit the all-time for gold at that time, which was $850 per ounce. So if you do the percentage on that and you look and see where we went from $35 an ounce gold up to $850 gold, that's actually a percentage increase of almost 2,300%. So to think that with the moves we've seen recently are the big moves, they're really not even close. We're not even a third of the way to where we were in that particular market. And there's so many things happening today with foreign government central banks trying to get out of dollars as quickly as possible. We could see even bigger moves in the future.
Definitely. I mean, when we started this, our debt was nowhere near where it is today. I mean, we didn't fathom that we'd ever see a $36 trillion debt. The number is so astronomical. It's hard for most people to wrap their minds around. However, right now the predictions don't stop at 3,500. Now we're going to see some pullbacks along the way. That's going to be natural in the marketplace. And also, obviously, if you're watching the Dow Jones, that's been up and down. It's been volatile. Now, if you've been watching the show, we already said in the beginning of this year, get ready for a very turbulent ride. And it has definitely been just that. It's bumpy for sure in all sectors of the economy. So a couple of things that we'd want to talk about is some of the predictions right now. Maybe you could enlighten them on some of the predictions.
Yeah, some of the ones you're probably going to know of the most. I mean, Goldman Sachs said recently that they could see gold going to $4,200 an ounce this year and $4,500 an ounce by next year. Morgan just came out this morning and said that gold will go to $4,000 an ounce by the second quarter of 2026. And Robert Kiyosaki, who we all know, is saying $5,000 gold. And I remember talking to people, a couple years ago when he was making bold predictions like that, and everybody thought he was crazy. But those numbers are coming true right now. And again, don't just rule out what's going to happen. The markets are going to get volatile at times, and people seem to be wanting at times to kind of capture profits at a certain point when thinking that it's the high. But a lot of times it's the same people that thought gold was at a high at $2,000 an ounce. So, we have to sit back and wait and see what happens, because the foreign government central banks are not stopping buying gold anytime soon.
And unlike COVID, where premiums were at some substantial premiums, can you kind of tell them about, because of how fast gold has been moving, what premiums are doing now?
Yeah, it's pretty crazy, actually. It's really a buyer's market in many ways, especially for investment grade coins right now. Some of the premiums I've seen in the past have been as high as 188% over the spot price, are in the range of 20 to 25%. So there's a really good opportunity to take advantage of that. And right now, the bullion market, because the general public has not jumped in yet, and the majority of the buying has come from central bank buying, we're seeing the bullion market run, whereas coins aren't going as quickly right now. That's normal. It's what typically happens. But when the general public does get in, when the stocks, volatility start to get even more volatile, when they start to see things get more expensive because the dollar's value is dropping, the general public will get in like they always do. Eventually, it'll probably head to a panic mode, and those premiums can expand exponentially. Now, I remember back in those times when we've seen these coins outperform bullion by several 100%. I don't remember anybody ever calling in and saying, you know what, I think I should give back some of that extra profit because these coins went up too much. So be patient, because I think that's coming very soon.
I will tell you right now, there are some great buying opportunities because of those premiums being so small. If you had high premiums right now and high prices, I mean, then yeah, I'd say it's time to pull shoot, but we're not there at all. We're not even close. So, I think that's something that our clients should be considering right now, is that it might be a really good time, if you don't have enough right now, to go ahead, especially if you see little pullbacks here and there, like we've seen this week. We've seen the highs, we've seen the pullbacks. Like when you see that little pullback, that's a good time to strike.
Absolutely.
And call in and see what we have available right now. And we do have good inventory right now. So I think it's time to take a look at that for sure. The last thing that we want to talk about today is that if you're in town, or if you're around, we have the Scottsdale Gun Club event coming up this Saturday at 8 a.m. It's going to be a little car show. There's going to be cigars. There's going to be coffee. There's going to be the opportunity to go in and shoot machine guns, all kinds of fun stuff like that. So definitely we would love for all of you to join us. We're one of the sponsors of this event, and we love our friends over at the Scottsdale Gun Club. So we thought maybe we'll all hang out together. So if you guys want to come join us, please, 8 a.m. on Saturday. Steve, can you wrap it up for us?
Absolutely. Thanks for joining us again, and we'll see you next time on the Gold Spot.
If you enjoyed today's Gold Spot, like or subscribe to both our YouTube and Rumble channels. Also, comment below if you have any questions or if you'd like to hear us talk about a specific topic in a future video.